following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. And this old cowboy has been up all night. I got a call about 12:30 Tucson time from my broker. He has instructions to call me on wild things happening, and evidently something happened in the interest rate markets. Our bonds dropped very, very rapidly. They came back quite a bit, as a matter of fact, but this all started about, I think about 2 o'clock in the morning, my time, so it's been kind of crazy stuff. But the first chart that I've posted into the room today is the chart from the co-author of the book that we did on astrology. Shane did the work. We worked on what we were going to do, but he's so good with computers and has such great ideas. This is one of the sheets that he uses to show whether the market has a positive or negative balance. And as you can see, those red lines coming across there, give it a very strong indication that there's a bearishness was for today, and that happened, all the way through the middle of the night. What's interesting is that one of the advantages of being up in the middle of the night is you get to see, some of the really craziness that was going on. If I can just find it, where did I put it? I just did it for you. Here it is. Just relax, take it easy, have a little fun. Okay, we're going to put this one up. This is the NASDAQ in the middle of the night. You don't have to do anything with the cycles or astrology or anything. All you have to do is look at the price and time. And we went all the way down to that 43.34 area was the exact low that it came in at. That was your perfect ABCD move down in both time and price. And we've since rallied, well over 50 points from that low. So we had some type of a major bottom here in the market that was hit sometime in the middle of the night. How long it's going to last, we don't know, because this has happened to us several times where we have these strong rallies and then they give up. What this is telling us, folks, is it's getting ready for something really, really bad. Two things tell me this. One is the bond market. This bond market looks like, it looks like dog do on a good day, and the notes don't look much better, but something's not right here. We've got interest rates are spiking in other parts of the world. Today it happened in Germany. The German bond spiked 80 basis points, which was a huge amount for them, and this was at the same time. So somebody knows something, and it's getting ready to happen. And my guess is, if it's going to happen, folks, it's going to happen when you're sleeping. That's going to be my guess. We didn't have overnight markets in 1987. That thing started Sunday night in Japan, when Secretary of the Treasurer Baker made a comment about we were unable to reach agreement, something like that. I don't remember exactly, but that's what started it all. I was driving back from a wedding down in Beverly Hills. One of my good friends and one of the market wizards was getting married, and I was coming back at about 8:30. For some reason, I called my buddy in New York at the trading desk just to see what was going on, and he told me, he said, "Oh boy," he said, "this is coming." He says, "You can't believe these quotes," and they were really crazy. Currencies were moving 200 pips, and it was really wild. It was really wild at that time. But that's my guess, is it's probably going to happen, while you're sleeping. You're going to wake up and you're going to see something really crazy happening. With overnight trading, if you have the ability to be there, that can be a big help. But if you don't, you're just going to have to plan, some way to be around it to see if it's going to come true or not. Maybe it's not going to come true. All I'm saying is that it has the ability to have that happen. Now, since we're talking about commodities, we had one of the most bearish signals you could possibly have on a commodity yesterday. I'm going to put this up and show you. This is the crude oil contract for the June contract. And as you can see, we've had that it was actually a 30% rally into yesterday. We left this huge shooting star candle. We've actually down about another dollar today. So as long as you don't take that high out, it looks like the crude oil contract is getting ready to retrace. And the minimum retracement on this would take it down to about $55 a barrel. That would be the minimum. And a 61% retracement on this would take us to about the $51 a barrel level. So these are the things that we're watching with the crude oil market because it's so interesting. Now, we had a situation happening in the gold market last night. I'll post this one in because it went down to the exact number a little bit later in the morning. This is what I was watching last night, and it went right down to that 1180 level, then rallied all the way up to 1189, and then back to 1179 again. Now we're trading at 1183. So we're having a great deal of volatility in everything, which is kind of surprising. Well, I guess it's not very surprising, but it is happening. So you have to be prepared, to see that these things, are actually occurring this way. The other thing that occurred that was, I thought, relatively important was in the euro. The euro got all the way up to 114 and change, and then broke 160 pips all the way down to 120.40. So far, we've had 250 pip rallies in this market, and that's what's happening, with it right now. So we'll see if this is going to be a turn in the U.S. dollar, which the euro comprises, basically in the dollar index. The U.S. dollar is a 53%. The other currencies like the pound are not doing nearly as much movement as we're having in the euro. Now, whether the Draghi and company is going to do something unusual or not this weekend or sometime overnight, we'll have to wait and see. But you just keep your guns loaded, folks, because there's going to be some big things happening. They don't shock me very much. And today, with that bond move, I mean, it dropped 1.5 points in a matter of a minute and a half. I mean, it was just so fast that you just couldn't believe it. And then it stopped and made a beautiful 3 pattern, a 135 buy pattern down at that 53.20 level, and rallied 2 full points from that level. So it's had some pretty good swings today, which you'd like to see. And that's primarily, what we're keeping an eye on from the old commodity standpoint here. Now, we're going to have Rich Anderson on at the break, and we're going to be talking about the grains because we've had some really big signals happening in corn, as we talked about on Monday. And yesterday we talked about it a little bit. We'll talk more about it with Rich today and some other things about the commodities. And he'll give you some insight on, some of these other things that are happening in these financial markets. Because, folks, when you have a bond market that gives up that much that fast, you've got a problem, because that market is much, much bigger than any of the stock markets. This is huge money moving, folks, and this is mom and pop stuff. So somebody's getting scared. They've been getting scared since they got to 164, just about 5 weeks ago. And now we came down all the way down to 153. So we're terribly oversold. But the question is, are we going to turn and make some type of, really meaningful rally here? We won't know that, but at least we started today. We're well over 2 points higher than we were from our lows that we made, early in the middle of the night. Interest rates are going higher. There's no other way you can put it. Now, I don't know if that's going to be the trigger mechanism that's going to scare the people in the stock market that believe the Fed always has your back. Janet Yellen she told us yesterday about it. She's warning you. She said stocks and bonds are overpriced. I mean, she's doing everything she's supposed to do other than telling you, says, get the hell out of the market. Uh-oh, I said the H word. Uh-oh, I hope I don't get canned. Anyway, she's telling us what she's going to do. So it's a matter I don't think it's going to be September unless there's something crazy happening. My guess is it's going to be sooner rather than later, and it'll be a surprise. It'll probably right in the middle of the market so they can get it over with. And then we'll see. And that's just going to be the first one of many. You just have to get used to it. And that's not necessarily bearish for stocks. It could be bearish short term, but higher interest rates are actually not a bad thing. is what you don't want is high inflation, and we certainly don't have that, do we? Things are not going up in price like meat and other things that we eat on our tables, but the other stuff is going down a little bit. At least crude oil has been dropping, for about a year, and then we had this 27% rally. So we'll see, how this is going to happen. But these financial markets, they're not for the faint of heart, folks. You have to be, if you want to participate and you think it's going to go down, you're going to have to be short. You're going to have to stay through some heat when it happens, because these markets, like just for example, Friday, the market rallied 260 points. And then what we do by Wednesday, we were making new lows by a substantial amount. And then we're having these rallies of 150 points in the Dow all the time. So you just have to be prepared to handle them and, pray, use the old hope and pray. I mean, hope's a terrible word for trading, but you certainly want to be able to, pray that you're on the right side when one of these things occur. But I think the bias now is with the down moves that we're having, the bias is to the downside. I wanted to make a comment. They're J.P. Morgan and Morgan Stanley and one of the other Barclays are settling with the Justice Department for their role in rigging Forex trading. Now, if you and I do that, we go to jail. All they do is pay a fine from the stockholders' equity. Something's not right here, folks. Somebody's got to be held accountable for some of this stuff someday. I don't know when it's going to happen, but somebody's going to have to be held accountable. That's just not right. That people don't go to jail for crimes that are, they're basically white-collar robbery is what it is, but under the guise of profit taking and stuff. But unfortunately, we have to live through it, but it's just not fair. I wish Elizabeth Warren would run for president and get elected, because at least she would be able to do something to correct it, because it should be corrected. People that do break the laws, sure, they can pay the fines, but there also has to be some going to jail. What do? They put a small hedge fund guy in jail for 6 months or 2 years, whatever it happens to be. And but the big guys at the big banks, doesn't happen. Just is not going. It's not going to be the same thing. There's just nothing you can do about it. So you just have to stand aside and wait and see what's really going to happen. That's basically it. Well, we've got a good rally going here in stocks right now. We got the Dow up just about 100. And that's a good sign for people that are in the market. So we'll see how much. We're up 109 in the Dow. We still got, gold's still down $8 on the day, and still silver's down 17 cents. I wanted to share with you the chart on silver, too, because it did the same thing that the gold did, except it stopped right at the right numbers. The problem is that when it stopped, it didn't give very much of a bounce. I mean, it just, basically bounced about 15 cents, and that was it. Okay, we'll take a little break here, and we'll be right back after the break.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, we're back, folks, and we were talking about the currency markets a little bit, the fact that we've had such a reversal here in the crude. Let's try that again, in the euro versus the U.S. dollar. It's had 170 points move to the downside, and now what it's doing is it's setting up to, looks like it wants to be a potential move to the downside. But remember, this thing, 170 pips, is not really very much in the euro, but when it happens in one day in a matter of a few hours like it did overnight, then you have to be really, really careful. This could be one of the reasons why we're having some strength here in the stock market. We're up well over 30 points from our bottom, which is usually a good thing. So we'll see if that's going to have any effect on some of these other equities that we're looking at. Gold has not really done very much, as we mentioned before, nor has silver. And so we'll see if this is going to be the case. These big rallies that we're having in stocks, we've had these before. This is not, I mean, we're not finished yet. We're not even halfway through the day. Remember, but on Friday, we had a rally of over 200 and some points in the market. And then what happened on Tuesday, it gave it all back. So this is indicative of what happens to some of these things. So keep in mind that that's what we're that's what we're looking at. So just be careful and make sure that you're looking at the right things when you look at your charts to make sure you don't get trapped in some of these things. The main thing that I can see today from yesterday is the fact that that candle pattern that we had in the crude oil, that is just very, very bearish. It could change in one day, of course, but the fact that we're well over $3.50 a barrel off the high. We've rallied a little bit back, about $0.50 a barrel so far today, but it's still extremely bearish. So we want to watch that also unfold, because we could get a pullback of a substantial amount in the crude oil without any trouble at all. And gasoline looks even worse. We've dropped over 20 cents a gallon just in the past 12 hours in trading gasoline. So we had a high of 209 yesterday during the report that came out, and then the market went all the way down to 198 today, and that's a very large amount too. So you've got to keep that in mind, with some history, so you'll know where you stand when you're looking at some of these things. So just remember that these markets are very, very volatile, and you have to take good care. I know you don't trade the markets overnight and stuff like that, but what you really need to do is to pay attention to your positions and know that you are susceptible to some of these major moves. I mean, you can see what's happened with the IBB, the biotech index. You can see what happened to LinkedIn. You can see what happened to Twitter. It can happen to anybody. So when this news comes out, it can be really crazy, and we're living in crazy times. So what we want to be able to do is to tell ourselves, to prepare ourselves the best we can. And I hope it doesn't happen, and I hope it doesn't happen overnight. I would rather see it happen during New York market hours, so people can take advantage of protecting themselves in some way. But be very careful here, folks. This has been a long bull market. It has not retreated very much. We haven't had any major corrections since July of 2011, when I was down in Clearwater visiting with Tom. And I remember that day because we had combust that day that the market turned, where Mercury was conjunct the sun, and it's just a lot of astrological. Bradley date was turning at that time. We had an ABCD pattern, and then the market took off and ran up into wherever this high was that we have formed on April the 27th, which appears to be some type of a major high. We've not come close to taking out the March 13th low yet. When we have on some of the indices, we've taken it out in the transportations, we've taken it out in the utilities, but we have not taken it out on the others. So keep in mind that that's still to come. And I believe, folks, the market is telling us that it's going to crash. It is telling us that it's going to crash. This is the same type of stuff that we went through during 1987. After the high on August the 25th, we start seeing increased volatility. And from August 25th all the way up into October the 2nd, when it made that rally high at the 61% retracement, the market was just going up and down, just in craziness. Well, it wasn't crazy to people to do pattern recognition, but it was crazy. And then when it closes really badly one of these days on a Friday, you don't want to be long that day. You want to be short into that, because that's when it'll happen. It'll most probably, well, that's what happened in 87. Maybe it'll be different this time, because now we have, overnight markets. We're going to have Rich Anderson here at the break, and we'll see you in a few minutes after we pay a few bills.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks, and we have Rich Anderson from Anderson Capital Management on the line. Rich, how are you doing?
Good. Can you hear me?
I hear you perfectly. And my first question comes from me, and that is, are you seeing any indications from your clearing brokers that they're asking for more margin or to be aware of certain things happening in the market? Have you heard any announcements like that?
No, I mean, you know, the Swiss franc unpegging was really the first shot across the bow where overnight people lost 30%. Yeah, and the margins were 1 or 2%. I am hearing about financially banks in oil companies. Now, this has to do with stocks and, you know, really isn't where I'm at. But, you know, that if I'm a large company, I borrow X amount of money, right? And I can use some of it for hedging and some of it for operating. Well, when the oil prices have come back down, as they have recently, and you meet with your bankers, which you do on an annual basis, they've restructured what the amount you can borrow. And it's making it a little bit more difficult for some of these energy guys to get their hedges placed, you know, going forward. And the exchanges are, you know, a little nervous about all kinds of things. Deutsche Bank would like to follow in Goldman Sachs's example and structure their trading and stuff, but when they've done the stress tests, they don't have enough capital to do that based on how the European Central Bank wants them financed. Anyway, I thought that's kind of interesting, but I'm actually hearing about that from bankers to companies, and therefore the companies are a little tight on where their money's going to come from to meet the margins. Because if they use the money for margins, then all of a sudden it's going to short their operating capital for some companies, that are affected by these low oil prices.
We have our first caller. John from Philadelphia is on the line. John, are you there?
Good afternoon, Larry. Thanks for taking the call. And hello,
Rich
Mr.
is
Anderson.
on the line for you. Go ahead.
Rich, I would like to ask you about the grain markets, in particular wheat. And, Rich, I just observed two things, that the bear market in wheat prices since the peak in 2010-11 is very well advanced. And I also observed that when I go to the CFTC and check into commitment of traders data, I see that actually in Chicago wheat, Kansas City wheat, and Minneapolis wheat, the speculator crowd is heavily short, almost record short, all three contracts, betting on lower prices still. My question is, here we are in early May, and seasonally speaking, harvest lows I've observed over the past, more often than not, come in June or July. Is it possible, given how advanced this bear market is here, that we bottom here in the month of May instead?
Well, the wheat harvest is about to start. Actually, right now, what you've got going on is the Kansas Wheat Tour. The first day of it was yesterday, and they said that while the crop is better than last year, I think last year we had a 30.8 bushel yield. It's still way below the 5-year average. And your observation is correct. They're heavily short, so the market is set up for major spikes. These spikes can be very dramatic, and they can be let's put it this way. Remember how crude oil bottomed when everybody was bearish? The same thing can happen. And the second day of the crop tour is probably going to show yields are the same. This looks like the thing to do. I'm actually been buying Kansas City wheat and selling corn against it, or buying Kansas City wheat and selling beans against it, or buying Kansas City wheat and selling Chicago wheat. I think the Kansas City-Chicago relationship should be more like 35 to 40 cents than 25 cents. It got down to 12, I think, maybe last week. So that's how I'm taking advantage of that.
Thanks so much on that. Can I further just ask you, I am starting to read reports how farmers across the Corn Belt, especially those who are renters of land, are getting pinched to the point of being forced into bankruptcy, given their high land expenses, low crop prices currently, and all the new tractors and whatnot that they've purchased in the past 3-4 years. Are we getting to the point, do you believe, where marginal players are going to be forced out of the business and possibly lead to reduced supply, reduced growing, just as a result of that?
No, not even close. The farming has been so good for so many years in a row, and last year was, the revenues came down sharply because the prices were lower. But it was still, for many of these guys, because they had better yields, a break even to a profitable year. We haven't had the experience yet where they've really been hurt and they're sitting on tons of cash. Most of the time when farmland comes up, the people that buy it pay cash for it. They probably have some machinery loans, but that's because farmers never pay taxes. They like depreciation and interest. I've not met one group of people that dislikes taxes more than the farmers dislike paying taxes. And so they're always buying new equipment for the depreciation and stuff like that. But 3 to 5 years from now, if this were to stay the same, then it could be a problem, but not now. The,
All right.
the
Thanks so much
cash
for that insight.
prices haven't. The cash price of farmland has come down a little bit, but not much, and the cash rent price hasn't really come down terribly much yet either.
Right.
A lot of the
Mr.
farm
Anderson.
rent programs are so much cash plus a kicker if the price is above X, and if the price is above, let's say, so much per acre, and then if the corn is $6, there's maybe another $25 an acre, and if it's $7, another $25. So it's kind of floats partially.
Terrific. Thanks so much for that insight. That's very helpful.
All righty.
Rich, one of the things that we were talking about on Wednesday was we had a big Gartley pattern form in the corn where it hit the 61% retracement in the cash corn, and yet we had these large ABCD patterns form in the July and December. You want to give us your feeling on what you think the corn is doing?
Well, on Tuesday when we made our lows, I had a friend tell me he thought July corn could see all the way down to 275. I mean, and then after he said that, every tick was up for the next 2 days. We do have a tremendous amount of supply. In fact, China came out this morning and talked about how they think they're going to produce a record crop this year. And they have huge stocks of corn. And as you know, with the oil prices down, we're producing less ethanol because gasoline prices are down. So and then we've got the bird flu, and the usage there. The fear is that so far the amount of birds that have been killed is for an individual producer it's tough, but as a total of what we kill each week, it's a rounding error. But the fear is that it could spread and become a consequential amount. So all these bearish things were there on Tuesday, and yet the market bottomed and bounced up. Just like in the wheat, there could be too many people short, and then all of a sudden you got nobody left to sell, and that's when you catch these rallies. Not unlike yesterday, we had a drawdown in the oil, and as you know, I'm not a fundamentalist, but this oil drawdown came out, a friendly thing. Oil rallies a little bit, and then closed on its lows, and it's down again today. That. It's not so much what a report says as the reaction of the market to the report. That tells you really the condition of the market. That's been true from the beginning of my trading experience. And we have, by the way, a grain stocks report next Tuesday, a WASDE one that'll tell the carryovers and the world stocks. And so the market grain markets will probably just chop around during that period. Mm-hmm. But I think there's kind of interesting situations developing in the energies, in the euro, technically.
What about the weather pattern of potential El Nino with a high pressure coming in over the upper part of the northern states?
Well, I got to tell you, we've had forecasts for rains. I'm in Minnesota now. We've had forecasts for rains, and it's really not amounting to very much. We need inches, not 20, 30 hundredths. And I was out in South Dakota at my farm out there last week, and it's got to be about as dry as I've ever seen it. And the guys are starting to get a little nervous, more than a little nervous. Some of them are wondering, should I even bother planting? But as my grandpa always used to say, plant in the dust and you never go bust. But it's the grass. The grass is. There's no moisture, and so it's brown. It's kind of going dormant in the springtime. So we need some help. We didn't have much snow. We need some help, and that when that develops, when it gets dry in an area, then it kind of develops and broadens. And if it starts to broaden, then eventually the market will wake up and take notice. But right now, there's no concerns. Nobody seems to have that as a market factor, and thus we don't have very much weather premium priced into these markets. And that's probably where the opportunity is. Volatility is still relatively low in the options, so you can buy an option. At least you're limiting your risk.
One other question that I wanted you to expand on, if you have time, and that is what happened during 1987, Rich, how crazy it was, because we were talking minute by minute during that time, as you'll remember. And the folks here, we didn't have overnight markets. You want to tell them how bad it was that day? Because you were a broker on the broker side of it. So just give the idea of what it was really like.
Well, you're talking the stock market now.
Yeah.
You're talking
Well, it happened. Commodity markets were the same way. I mean, bonds were moving 4 or 5 points.
Yeah, it was unbelievable. I was at Prudential at the time, and I had the only commodity quote machine in the office, and I think our office maybe had 25 brokers, and 15 of them had futures accounts with me, and were standing around my machine. and guys that had let's say one guy in the office was a guy that had been shorting puts, and he took a $10,000 position and turned it into a $100,000 loss that day. And I had one of the guys bought a couple S&Ps, and he was up 50 grand immediately, and ended up being out 100 plus on a 2 lot. I mean, it was just nuts. And then afterwards, there was one guy in the office that had actually been there in the 29 crash. And he told us stories about how they wrote tickets so fast they just threw them in the waste paper basket, so they didn't have any place else to keep them.
Oh my goodness!
Back in 1929, that was really educational. But we have limit breakers, circuit breakers now. So,
I don't even know what they are, Rich. You mind telling us what they are, because I'm not even sure what they are.
Well, they change every quarter, and I'll email them to you, and you can. They're too complicated to just say, oh, it's so many points. They adjust them every quarter. I'll email them to you, and you can post them on your site or whatever.
Oh, you share them in the show for sure. I would certainly like to do that, because I don't even know what they are now. I mean, we haven't been exposed to anything like that for so long that it's really, that's the time when you really want to pay attention to it.
Right.
But roughly, it's about 1,000 points in the Dow or something, or is it more?
I think it's something like that. I'll look it up and I'll get the information to you, but that's what's going to keep us from having that particular day, by the way, for the mathematical option people, was a 5 standard deviation move. 5
standard deviations. Oh my goodness. I know the spreads on the S&P was 20 points. Yeah, those were.
So all you do to get a 1-day standard deviation is you take the implied volatility of whatever stock or commodity you're interested in, and then so that gives you, that's a volatility for a year, right? Mm-hmm. So then if you want to take and make it for a day, you multiply it. Okay, so let's say it's a 20% volatility. You divide it by 16, and that gives you a 1-day volatility.
Mm-hmm. What is your best scenario for a grain trade coming up? Because we're in the middle of the planting season now. Do you have anything that you're really looking at really closely?
Well, if you're going to buy options, you want to give yourself the gift of time. So I would go out to the Septembers. And as we talked the other day, and a lot of people don't know this, but they have short-dated options. And a short-dated option is just an option on new crop that expires. And new crop corn, as an example, is December. New crop beans is November. And they have short-dated options that expire in July or in September. I think you got to go with the September options, because that gives you the weather concerns, if they develop, will be in July for corn and in August for beans. So you go out to the September options that expire on September 21st, and you go to the new crop ones, because we have a lot of stocks old. So you go to the new crop ones, and you pick up some cheap stuff or do vertical call spread. The problem with the vertical call spread is if we get a big pop, you don't really make the money. So you're better off just buying some calls.
Listen, we got to run, Rich. So I'll have you on next week, okay?
All right. Sounds good.
Thanks a lot, buddy. Appreciate it.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the Future Economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN. Now, back to the Futures Hour.
Okay, folks. Well, we've talked about the stock market a little bit, the importance of these wild swings that we're having, that they go up and down. One of these days, they're not going to bounce. Or I think we're going to have an extended, 5 or 6 day down move that'll be quite dramatic. So just be careful. The other thing is the VIX index is still not showing much of a sign of any type of pattern that is really, really dangerous. We've got above 15, but nothing explosive. The other market that I'm watching is the junk bond market. And believe me, the people in junk bond market are totally unconcerned about what's happening to the U.S. Treasury AAA quality bonds. I mean, they have backed off very, very little, whereas the bond market and the note market have gotten hit really hard, which tells us that we have very little support under this thing if it gets ready to go. That's the way it looks to me. I've been doing this for a long time, boys and girls, and something big is coming. I saw this in '87. I didn't know how bad it was going to be, but after the more experience that I've seen doing this, there's just too much complacency around, and you listen to it in the news, and something bad is going to happen. This bond market is telegraphing that something serious is coming. It's not just Janet Yellen saying what she was saying yesterday. This happened long before she said anything. So just be prepared, folks, because it's going to be an interesting situation, to say the least. In the commodity markets, the only thing that looks really, really bearish now is crude oil because of that shooting star that we have there. If you go back on your charts and look what happened to wheat back last early December, we had the problem with the Balkan island things and with Russia, where they were not going to deliver wheat, and wheat rallied 35 cents one morning, and that made a shooting star. It closed down on the day, right on the low of the day, and it dropped to new low ground. It dropped $7,500 without even batting an eye. Remember, we've rallied 27%, or a little more than 27%. In the crude oil over the past 6 weeks from our March lows, so we could make a correction that could be, quite substantial. So these are things you want to keep in mind. They're just chart patterns. Regarding the potential Gartley that we have in the corn, you still have to do that trade. They rallied 15 cents off the bottom. Now you want to see what the retracement's going to be. But under any circumstances, we cannot go below the low of that we made just 2 days ago, because that is a very, very important ABCD low. Perfect mathematically in July corn, in December corn, that's old crop and new crop, and then also the cash crop in corn is hit the exact 61% retracement off of those lows. So these are important numbers that we're dealing with here, folks. So keep in mind that we must pay attention to them without any hesitation. That's the best way to look at it. Next Monday, I'm going to have, is it Wednesday? No, next Wednesday, I'm going to have Norm Winsky on. He's got some more astro dates coming up, and he did a really good job for us this past time, because he was telling us about the importance of April 27th, and sure enough, along with the work that he and Bill Ehrman did, that was, and also Shane Smolian, he was spot on with the things that he was looking at also. So these are the things that we want to watch coming up. But we will have Norm on. I'm hoping to have Larry Williams sometime this summer. He's been traveling quite a bit through Asia, so he's taking a little time off. But when he's back, we'll get him on the air, and hopefully Bob Prechter also. So we'll keep these folks in mind. And one other thing on the trading, folks, make sure that you don't keep anything more in your commodity or stock account than you absolutely need, because I worry about counterparty risk on some of these things. If these banks think they can just fine for this stuff without being protected, you got to be careful. So keep as little on there as you possibly can. So that's what you really want to try to do. Protect yourself at all times, because nobody else is going to do it for you, folks. That much I'm 100% sure of. So this is it. Live every day in an attitude of gratitude, and may God bless, and do something nice for someone who has a lot less than you today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.